We got a pretty good credit card, I guess, that we can tack that on.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to have you with us. Well, today, as we start out a new trading week, but we talk about the last trading day of September. Yes, indeed. We're going to be rolling over into a new month and a new quarter tomorrow. But here on the last trading day of September, we had a quarterly stocks report to talk about. Now, I want to remind you, make sure you like these videos, subscribe to the videos by clicking the bell icon below, and like these videos and share them with others as well as we expand our audience, thanks to your help. Okay, with me, I have Matthew Kruse, the president of Comstock Investments. We're going to take a look at Monday's quarterly stocks report. And Matthew, I believe I can bring those numbers up on the screen here right now, and we can take a look at this to see what you think of those numbers. So let's start here first with the quarterly stocks numbers and what really leapt off the screen at you when you first saw these. Anything?
I think today was a good day for the corn. You know, the stocks came in at 1.76 billion bushels, so it was a little bit less than what the average trade estimate was looking for. You know, it was quite a bit higher. I think about exactly 29% higher than last year at 1.36 billion bushels. But the point is that the trade was still expecting a little bit more than what they actually found. And so that's kind of why we're seeing a positive reaction so far for the moment in the corn market. We're not at the close, but we're up about 7 cents right now. So not a huge reaction, but, in the case of the corn, it was a moderately friendly report. Not so much the case for soybeans and wheat. They're pretty flat, kind of, I would say maybe neutral. They came in a little bit closer to what the average trade was looking for. In the case of the soybeans at 342 million bushels, a little bit below what the average trade was looking for at 351. And then wheat was a little bit higher than what the average trade estimate was looking for at the 1.986 million bushels versus the 1.973 for the average trade estimate. But what I like about the corn is, essentially they're, they shaved off, about 50 from that last stocks estimate of 1.812 billion bushels in the case of the corn to this 1.76 that they updated it to. You're shaving off about 52 million bushels. Now, if you go back to what they had for the September report for our 24-25 ending stocks, we were at about 2.057 billion bushels. So it basically takes us down to nearly a 2 billion bushel flat level, which it's not a game changer by any means, but it certainly helps us push us in the right direction and continues to give more argument that we could still see ending stocks fall below 2 billion bushels by the end of the year. And that's kind of an important number just because it, anytime you get below that 2 billion bushel level, I think you can make a stronger argument for December corn to kind of rally back to 450, maybe even a little bit higher.
Want more? Sign up today for our premium content. You'll receive our reports twice a day, plus every morning, an in-depth market analysis with Eric Relf. Every afternoon, you'll receive our daily podcast with Marlin Bohling. The first month is only $1.
It's interesting. We have had a rally here for what's been 2-3 weeks at least, a nice little rally in corn and soybeans here. But now that this report has come out, is there enough in that report to really keep a rally going with harvest ramping up and really getting into full swing right now? Does that possibly concern you that it'll run out of steam here?
Yeah, it certainly does in the soybeans. We've seen a really strong rally here. I think the market, now that we've gotten past this report, is just going to go back to trading the weather, particularly in South America. I think that we've been taking advantage of this rally on the case of the soybeans and making sales. I think that we see a kind of divergence here between the corn and the beans, where we are more negative longer term in the beans, just because Brazil, South America in general, is expected to have a much larger crop. Our exports here in the United States are not where we like them to be. In the case of the corn, no, I'm not saying we can't still go back and retest those lows. We got to get through harvest. It's still pretty early there yet. So I think we might trade a little bit more sideways in the corn, but longer term, I guess I'm a little bit more friendly the corn, just for some of those reasons that I stated previously. Our exports have been very strong. I think we're going to continue to see them remain strong here through the end of the year. I still kind of am very skeptical that we can reach some of those high yields that USDA has projected for us, and so they could, shave off 1 or 2 bushels, and we'd still have a really good record crop. But it would see us, drop down to 1.8 billion bushels ending stocks, which I think would send prices higher. So, in the case of the soybeans, I don't. I was talking to one trader recently, and he kind of called the soybean rally bullshit. That's what he said. And I said, what do you mean by that? And he says, it's really not going to affect the overall size of the soybean crop. Just maybe pushes it back a little bit, but it really affects the corn crop, the second crop corn that follows it. And that's kind of what I've been trying to educate people on in our Comstock report.
It wouldn't be USDA if they didn't make some revisions, right? So we see some small revisions, I guess you would say, in the report. And this would be referring to last year's production, right? This would be the final numbers.
This kind of their final say of last year's production. And so, they're pretty much spot on. Didn't really change too much in the case of the soybeans. You can kind of see there the total crop was at 4.162 billion bushels. They're a little bit higher in the corn at 15.34 billion bushels, but they didn't change much in terms of yield. I think they made some minor adjustments to the harvested acres, and that's how they kind of came up with that number.
I know you have strong connections to Brazil. You were talking about that a little bit ago. And, in Brazil, you and I have talked in the past about the conditions for planting season there. And that's been a bit of a point of contention. A lot of people don't quite totally agree on what the outlook is. Let me bring up a slide here. Let's take a look at some outlooks here for Brazilian weather. And I want to get your take on this. First, let's take a look at this first week here in October. What is this map telling you here?
It's kind of the same thing that we've been seeing the last couple of weeks. It's kind of the central growing region for Brazil, that kind of encompasses most of Mato Grosso, Goiás, Mato Grosso do Sul, Tocantins, those areas. They're pretty much void of all precipitation for the most part. They might get a few scattered showers here and there, but nothing of substance. And that's what we're seeing this week, and that's why the market is the soybean market has been rallying, because they're waiting for the rainy season to begin, and it's taking just a little bit longer than normal, and so that's kind of what we're seeing for this week.
Let's take a look then 1 week further out, if you don't mind. So this would be for the second week here in Brazil. Let me bring this up, and we'll see what that has. Any surprises when you look at this?
Well, I don't know if it's a surprise, but we expect that precipitation as we move along is going to build. It's just a matter of when. This is kind of the time when the rainy season comes back, and so it does kind of confirm that there is a return of some precipitation coming into next week, and that's kind of why the market's looking pretty strongly out ahead at that. It isn't, I wouldn't say, massive volume of rainfall yet. You're talking half an inch to maybe 1.5 inches in some areas. Now, keep in mind, this is in areas that are experiencing 100-degree heat and haven't had, pretty much no precipitation for the last 5 months. And so it's almost like a barren desert. And so an inch of rain isn't going to do much. But it does kind of build, I think, or encourage producers to start getting out there and getting out ahead of it, and hoping that more precipitation is on the way and that the rainy season is finally going to start to show up.
Well, okay, and then I have one more here, and this is a very telling screen here that I want you to comment on this. How is the Brazilian planting season performing right now compared to average? You've had experience there. What do you see when you look at the chart like this?
I think what this chart shows is what we've precisely been talking about, is that the people, traders or people maybe getting a little bit ahead of themselves, right? That while yes, farmers can start in the month of September, they really don't plant very much yet in September. The bulk of it takes place in October and early November across the whole country. And a lot of now Mato Grosso maybe starts earlier, and so they get the bulk of the attention. But the country as a whole, they're looking at 70% of it is planted from that October 6th to that November 23rd period. And it's a big country like it is in the United States. Missouri plants before Minnesota, and so Mato Grosso plants before Bahia, and so it. But the point of this is that it's a little bit below the average starting out, but it's still very early. And maybe you could make the argument that okay, they're a week behind schedule, but Brazil has a long growing window, and so if it shifts the soybean crop back 1 week, it really doesn't affect the overall yield or output so much. What it affects is it shortens that window for the second crop of corn that follows it. And so that's what that one trader was saying when he was, saying that this rally is not sustainable. When he called it bullshit, that's what he's saying is that long term it doesn't change anything, and then we would tend to agree with that. And that's why we've been making sales. Now you get into November, December, January. Those are the more critical periods when you have soybeans that are flowering and setting pods and filling pods, things like that. That's more critical. But here, starting out, a week late, things like that, it's not gonna. It's too soon to say that really matters.
Here's a couple other factors that could have an impact on our soybean market. One would be the value of the dollar, which is fighting to stay at par value here lately. And another one is China. So with their recent incentives that they had, or a stimulus package they passed in China, do you think we'll see more Chinese business now for U.S. soybeans?
Well, I hope so. It's just going to come down to who has the better prices for the most part. I kind of feel like the Chinese are preferred to buy more from Brazil, or at least they have in the last several years. I don't know why exactly that's going to change. There's been a lot of, political confrontation between our two countries, but I still think that if our beans are competitively priced, they'll still buy from us. But I think that long term, I don't think that we should expect them to come back as large buyers. I strongly believe we need to, continue to focus on developing our own domestic market with renewable diesel and new technologies and things like that. I just don't see China being a reliable buyer in our long-term future, but not that they're going to completely, stop buying from us altogether or anything like that.
I did want to ask you, let me bring up this quarterly grain stocks screen one more time and look at the wheat. I was amazed at the reaction we had in the wheat. That didn't necessarily look like a real friendly number to me. Why did the wheat really take off when those numbers were released?
It could be that it just seems like the corn and wheat have been following in lockstep. So that could be a little bit part of it, just that the corn had a good day. But, wheat's been kind of similarly, looks like it's forming a bottom as well. And so I think that's a big part of it.
Before I let you go, I wanted to get your comments on there's a big deadline tomorrow. Longshoreman strike is threatened. If they don't get an agreement overnight, we could be looking at a lot of stoppage of inflow into the U.S., at least on the eastern coastline and the southern coastline. Do you think that'll have much impact on ag?
Well, it certainly could. The longer it goes, the worse it gets. I think it was in the pandemic we had this issue, right? And it took them a long time to sort that out. Everything got backed up, and I know the Biden administration caught a lot of flack for that. And so, I hope they get it worked out. I think that most of it is happening on. Is it more on the Atlantic coast? Is that right?
Pacific. Atlantic and the Gulf. Yeah.
Okay. Yeah, I was going to say that that our obviously the Gulf part I think is going to impact us quite a bit more. We don't export much of any grain on the Atlantic ports, but we do quite a bit obviously in New Orleans, and so that's what I was thinking was if it's happening mostly on the Atlantic ports, it's maybe not going to impact the flow our soybeans and exports as much.
Yeah, from what I understand, it's more on the container shipping industry, not so much the bulk carriers, although you don't know if there would be spillover support from those. So it makes people nervous, and it makes you wonder what's going to happen overall, if it'll have a big impact on the economy. That's also a concern, and maybe that could even spill over into livestock of all things, right?
Well, I think it adds up quickly. You know, I think it's in everybody's best interest that they get it resolved. I think I'd read that it can cost the U.S. economy $5 billion a day, which, you know, I don't know how we can afford that, but we got a pretty good credit card, I guess, that we can tack that on. So,
and one thing I will mention is all of our beef and pork that's exported, that would be in containers. So that would definitely possibly be impacted. So fingers crossed they can get something worked out on that. Yeah. Matthew, good to talk with you again. Thank you so much. Appreciate that. That's Matthew Kruse, the president of Comstock, with us as we take a look at the quarterly stocks numbers today. Appreciate you joining us. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.